Good morning, all. Welcome to the SBI Securities Daily Market Podcast, where we discuss views on Nifty, Bank Nifty, sectors in focus, as well as views on currency. We will also be discussing the positioning of FIIs with respect to the open interest data. Now, yesterday we saw Nifty closing with a 30-35 point gain, but the day saw a lot of volatility. First half, we saw the indices coming under pressure. It retested its support zone at 19,480, 19,500, which we already discussed yesterday morning while we were discussing the morning levels. Indices exactly took support at that zone, and it saw a complete U-turn in the second half, recovered its losses, and for the first time closed above 19,600 after 9th of August 2023. On the sectors which supported Nifty, it was IT stocks once again, and we expect the momentum in these IT large cap names to continue today also, such as TCS, HCL Tech. Bank Nifty once again underperformed Nifty. Clearly was under pressure because of names like ICICI Bank and Axis Bank. There was some rebound, although it was seen in a case of HDFC Bank from lower levels. So that supported Bank Nifty a bit in the second half. If we just discuss about the levels for today's weekly expiry for Nifty, important support zone lies at 19,500, 19,550 now, because a lot of put writers are aggressively building up their positions in 19,600 as well as 19,550 puts. So that means 19,500, 19,550 zone on the downside will act as an important support. On the upside, resistance would be witnessed around 19,650 and 19,700 zone, because 19,650 and 19,700 strike prices for calls have witnessed a lot of open interest built up. So we feel for the day the range for Nifty would be 19,500 on the downside and 19,700 on the upside. For the Bank Nifty, if we see the data build up in the next weekly expiry, a lot of significant put writing is witnessed in 44,000 strike price. So that implies 44,000, 150 kind of levels as an important support on the downside. On the upside, call writing is witnessed in 44,500 as well as 44,700 strikes. So that means that the first resistance for the day could be at 44,750, and once that is crossed, indices can make a move towards 45,100 where the next resistance is placed. So all in all, if we have to discuss on Bank Nifty, then Bank Nifty on dips around 44,100, 44,200 would be a good level to enter, and on the upside 44,750, 44,800 is the level from where there could be some re-emergence of selling pressure from higher levels. So 44,200 on the downside and 44,750 on the upside. Speaking a bit about the FII data, FIIs yesterday have been net sellers to the tune of 3,245 crores, 3,245 crores, while the DIIs have been net sellers to the tune of 248 crores. After a long time, we have seen DIIs becoming net sellers, so that's a bit important. FII long short ratio for index futures has been steady at 52%. But if we look at the overall data positioning, FII data kind of is bearish in nature. As we've seen, they have been net sellers in index futures, index calls, as well as they've sold stock futures. So kind of negative. Let us see how the day pans out today and how the data pans out today evening. That's very important, because this is the first day in this series where the data is kind of mildly negative. So we'll have to just wait and watch for one more day before taking a view just on the basis of the data build up of yesterday. Now let's discuss where there could be some important and interesting opportunities in terms of stock and sector specific moves. Continuation of bullish momentum is witnessed and is visible in IT names, power, cement, chemicals, and capital goods. Pharma and FMCG being defensive sectors yesterday saw some kind of a bullish reversal, and we saw some good moves, momentum build up in Cipla, Apollo Hospital, and Oro Pharma. While from the FMCG space, Kolpal, Marico, they saw some really good build up, and a good setup is being visible on the daily as well as weekly charts there. Uh, Another space where there was some action was fertilizer and sugar stocks. Now these stocks also saw some kind of a traction yesterday, and we expect these thematic moves to continue in these names. Uh, just a kind just an important thing that we need to update and be a bit wary about is the Brent crude prices, which have inched up to 88-90 dollars a barrel, and even add to that the dollar index sustaining above 104 levels. Now these could lead to some kind of a resistance at higher levels positionally, and can act as some kind of a dampener going ahead. Uh, if we discuss about USD INR dollar index, as we discussed, that sustaining above 104.20, which is quite elevated levels, could put a pressure on the INR. And on expected lines yesterday also, USD INR futures closed above 83.10, and that this was the second consecutive day where we have seen a close above 83 levels. So going forward, important levels would be support would be at 82.90 in futures, where the 20-day SMA is placed. Until these levels are held, we could see a extension of up move in USD INR up to 83.40, 83.45. uh, on the downside, the support, as we discussed, is around 82.90, and below which a corrective move up to 82.70, 82.55 can be witnessed. Overall range can be 82.90 on the downside and 83.45 on the upside. Uh, Gift Nifty today morning is softer by 25-30 points. So overall expect a flattish opening closer to 19,590, 19,585, and from there, as we discussed, 19,530, 19,500 zone could act as an important support, and on the upside 19,630 first resistance, followed by 19,700. So that's all from my side. Hope you enjoyed listening to the podcast and found it useful for your trading decisions. Do tune in tomorrow for more market related updates and insights. Thank you.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.